Investing can be a daunting task. Interest rate hikes, inflation, and a possible recession mean a lot of folks are worried about their finances. And in times of uncertainty, investors tend to turn to US Treasury bonds and ETFs such as a 20-plus year Treasury Bond Fund, TLT. However, with the problems facing the market, an inverse fund, the ProShares Short 20-plus year Treasury Bond ETF, which we rate at 10 out of 10, hit the top of the Financial Pro searches, according to Trackstar, a proprietary sentiment indicator. Now, inverse ETFs can be tricky to master, and inverse bond ETFs use derivatives such as swaps to track an underlying index. The ProShares Short 20-plus year Treasury ETF is a fund that seeks to provide investors with the inverse of the daily performance of the Barclays Capital US 20-plus year Treasury Index. This ETF can be a powerful tool to bet against long-term US Treasury bonds, as it stands to benefit from rising rates and a hawkish Federal Reserve. Bonds have performed well in recent years, and any bet against the bond market typically has negative returns. And that's why most bearish bond ETFs are best used as hedges or trades rather than core holdings. There aren't that many bearish bond ETFs out there, and all of them focus on long-dated bonds, and the expense ratios are fairly similar. When it comes to investment style, TBT is effectively a 2 times leveraged version of TBF. TTT has 3 times the leverage of TBF, and Direction's TMV is really an alternative version of TTT. TBT is the most liquid of the 4 funds, with daily average volumes of 2.3 million shares. TBF is a great option when you want to bet against US Treasuries. It's the only unleveraged inverse bond ETF, which means you can hold it as a long-term hedge without taking a hit from leverage decay. And that's why for bets against long-dated US Treasury bonds, this ETF is 10 out of 10.